The Ghana Cedi is leading the global league of worst performing currencies, falling more than 51% as of October 2022. With inflation over 41%, the current economic situation has driven up the cost of living in the country to unprecedented levels. In this video, we will discuss why the dollar is so strong, why the cedi is so weak, and everything else that you need to know. According to some analysts, the Cedi dollar rate will stabilize because soon there will be no more dollars in the system, since everyone wants to dump their cedis for some dollars to hedge against the rising inflation and falling cedis. Now, this analyst shouldn't forget that we are in a digital age and there's an infinite amount of dollars online, especially in dollar-pegged stable coins such as the USDT, BUSD, USDC, and etc. Not to forget its decentralized nature, security, privacy, and ease of transactions. Now, investors see it safer these days holding digital money than physical cash. In short, there is no way there will be a shortage of dollars in the system. Now, some also claim that the high exchange rate will discourage people from buying the dollar, forcing them to rely more on the cedi to trade. And due to that, the falling cedi will slow down. Well, that can only be hoped for. But let's face reality. There will always be high demand for dollars in Ghana, since that's the only way foreign investors can repatriate their profits out of the country, and also the dollar is the only currency accepted by our international trade partners. So for example, according to 2020 data from Economic Complexity, Ghana imported $16.1 billion worth of goods from across the world, with China as a lead trade partner supplying 42% of the total imported goods, followed by the Netherlands, US, India, UK, Turkey, and etc. And none of these countries will accept trading with the cedi. So as a business organization or individual importer, you definitely need some greenbacks to facilitate your imports. Now, this 16.1 billion worth of import is expected to rise this year as it does every other year. Now, according to the Finance Minister, Mr. Ken Ofori-Atta, the current level of depreciation may have been occasioned by the rush for dollar to import Christmas goods. Well, if that's truly the case. He stated that the fall will be halted when the government reaches an agreement with the International Monetary Funds this year. But it seems the country is pouring so much hope in the IMF initiative. And the question is, what if the IMF program doesn't sustain the fall of the cedi? Because this is not the first time Ghana is going to the IMF for support. Unless, of course, the government will look at the reality side of things, which in my opinion, the actual cause of the weakness of the cedis versus the main reason behind the bullish dollar. Japan spent over $37 billion in its recent yen buying intervention to control the falling yen, and we are yet to see if that have had any ripple effect on the dollar-yen exchange rates, because the yen rate still shows that the yen has fallen significantly in value against the dollar during the past 6 months. Now, we don't think we can stop the yen's fall through intervention. Now, these are words of a senior finance ministry official indicating that their goal is just to keep the speed of its fall under control, and that until there is an end to the strong dollar, the current dollar trend limits Japan's options. Now, Japan spent $37 billion, yet are not expecting that to stop the yen from falling. And Ghana is looking forward to spend $3 billion to turn things around overnight. In fact, the IMF intervention alone may not help the cedi to stop falling, but a weak dollar is much needed, and timing may be the only reliable indicator. Now, what's boosting the dollar? The US Federal Reserve raises its key interest rates to combat inflation and bring price growth under control. Now, it's the fourth time in a row the Fed has raised interest rates by 75 basis points, and the sixth interest rate hike of the year 2022. Now, the Fed hopes that by raising the interest rates, it can slow down the economy and cause prices to stabilize. Investors have increasingly priced in the possibility that the Fed will take longer than expected to bring inflation under control. Now, the markets now expect Fed rates, which is now at 4%, to peak to about 5% next year. And several Fed officials have warned against expecting them to drop again anytime soon. Fed Governor Lisa Cook warned recently that inflation remained stubbornly and unacceptably high. And this, of course, is a signal for further rate hikes, which literally means a continuation for the strong dollar. The Ghana Cedi, on the other hand, is weak and bleeding due to rising inflation, an increase in imports, widened government expenditure, unsustainable debts, which, according to the IMF, needs a restructure. Rush for dollar by citizens, as the dollar is seen to be a safe haven at the moment, and etc. Now, the Ghanaian economy, aka the Gotjesburg economy, was created by a British Empire colonial administrator, Sir Georgian Gotjesburg, around the 1919 to 1927, the Gold Coast era, where he designed the economy to focus on the export of raw materials and importation of finished goods. Now, Ghana's economy depends heavily on imports, and as a result, the nation continues to buy foreign currencies to cover its import needs, while its exports are generating less foreign exchange. Huge sums of cash is repatriated by foreign companies and individuals that operate in the country. Clearly, the demand for foreign currencies will continue to increase unless the government will implement long-term measures such as industrializing the country to boost its exports. Now, JP Morgan has warned that the restructure of Ghana's debt will weaken the cedi even more, and the rise in the size of foreign exchange option or a change in the foreign exchange purchase policy will only provide a short-term relief for the cedi. According to JP Morgan, one of the causes contributing to the cedi's poor performance was the Bank of Ghana's decision to buy dollars from mining and oil companies, thereby limiting the companies of foreign exchange available on the interbank market. So, dear Bank of Ghana, I think reviewing this policy will be very, very necessary. You guys should allow the cash to flow. Nasika mpe dede.
L'argent n'aime pas le bruit. To wit, money does not like noise. Sika mpe dede.
The IMF support seems to be the only hope we have. However, that might not be enough. The initiative will not bring the rates down to 6 cedi per dollar as it were back in January. It may only slow down the fall of the cedi unless the Federal Reserve stop raising their interest rates, which might probably happen only after they have inflation under control. Now, these are global crises, so we need to pay attention to the international markets for signals to a potential slowdown, which experts are tipping 2024 to 2025. Subscribe to the channel if you haven't done that yet for more tips on how to protect your remaining cash and how to benefit from the ongoing financial crisis. I am Wiafe Ampadu. Don't forget to like and share. Leave a comment and tell us what you think about the ongoing crisis and what you want us to cover next. See you in the next video.